Alrighty, guys, let's go ahead and jump right into our second daily live webinar of the week. Thank you guys for taking the time out of your morning, afternoon, or evening to watch this. Even if you're watching the recording, thank you guys for taking the time. You are doing yourself a favor by watching these, helping yourself out. So first and foremost, let's go ahead and just very quickly look at the economic calendar. Not a whole lot that I want to talk about other than this evening, or at least that's here in Australia this evening, maybe a different time for you. So definitely go check the timing on your end. But in about 10 hours from now, we do have, this is kind of like, you could say it quote unquote, pre-non-farm payrolls. The Wednesday before NFP is released, and we know NFP is the first Friday of each month, or generally the first Friday of each month. So that Wednesday before the Friday that NFP comes out, we always see something called ADP, non-farm employment change, come out. That's a little bit of like a precursor of what the actual kind of sometimes hints at what the actual non-farm payroll number is going to be. You know, if we see the ADP non-farm employment change very low, we tend to see a low report on NFP as well. If we tend to see ADP non-farm employment change high, then we tend to see NFP very high. Now, that is not always the case. Sometimes we'll see ADP non-farm employment change low, and we'll see the regular non-farm payrolls high, and vice versa. So just keep that as a general statement, but something to keep in mind. We also have in about 10 hours as well, 10 and a half hours, we have some month-over-month report GDP, gross domestic product, for the Canadian dollar. And we talked about CPI last week and GDP. And if you guys remember last week's webinar, if you didn't get a chance to watch it, I highly recommend you watch it. It was the last webinar of last week, so it's going to be in your back office, the one that is labeled for the 26th of January, 126. That is the one where we went over CPI and GDP. And pretty much in a nutshell, GDP measures the health of the economy, or how much the economy has grown. It takes into, it's basically like a weighted estimate percentage growth of a bunch of different things. Everything from your computer to your TV to your medical bills that you pay to your school tuition to anything like that that you spend money on, gross domestic product. And generally when you see a high reading on GDP, that is going to mean that the economy is growing, the economy is expanding. You're usually going to see unemployment's low because which is good. Unemployments are low. It means a demand for jobs. So employment rate is high, and everything is growing. You generally see with a high GDP as well, you usually see the stock market doing pretty good for that economy, because generally, well, obviously if a stock market is doing good, then that means that the earnings of those companies in the stock market are up. And if we see GDP high, then that shows that growth is up, spending is up, everything is good for the economy. So it's an overall good health indicator of an economy. So we can see that the month-over-month GDP report for the CAD this evening is forecasted to be about 0.4%. So that is actually showing some nice growth. There's actually 0% growth in the GDP from the previous report. So if we see this come out strong for the Canadian dollar, there is a good chance we could see USD CAD continue to fall, which is, we're going to talk about USD CAD. I think that could be what we could look at seeing. I'm just very quickly looking at Euro USD. We are seeing that Euro USD rally coming in right now. So we're going to talk about Euro USD. We'll come back to this in a moment. Let's first look at the dollar index, and let me give you guys my bias. Let's look at the dollar index. Oh, and then just very quickly on the economic calendar, we'll talk about, we also have tomorrow. So actually before tomorrow's live webinar, we also have, so it's going to be a little bit more than 12 hours. In about 14 hours from now, we have the federal funds rate and an FOMC statement at the same time. Now, they are going to be leaving interest rates the same. They aren't going to be rising them. They aren't going to be lowering them. It's going to be staying at between 1.25% and 1.5%. So we don't really have to worry about too much volatility on the dollar, but there is a statement that is going to be released. This can create a lot of volatility on the dollar. I'm going to be a little bit apprehensive about placing trades. That's also one of the reasons why we pulled our position on Euro USD. Or not pulled our position, but we set our stop loss to break even so early on Euro USD is because of the unexpected volatility that we've seen in the market. But and then Friday, of course, we have NFP, which we'll talk about not on tomorrow's live webinar, but Friday's live webinar before this actually happens. About 8 hours before this happens will be Friday's live webinar. So let's go ahead and jump into our technical analysis for the day. Looking at the dollar index, it's looking pretty bearish. We talked about a potential pullback in the markets yesterday, but that was just one of the things. If you guys were on yesterday's webinar, I went very in depth about the psychology of the markets, and we can't just trade what we want to see. We cannot ignore the overall trend on this pair. It is still very, very bearish, and that was the gist of what we talked about yesterday. And talking about continued dollar weakness is very possible. It's not out of the question. We do not necessarily need a correction to go lower. Equities in the U.S. are down. Consumer confidence is down for the dollar. Just overall, the dollar is taking a pretty big beating right now. The people that move the market, we're talking institutions, hedge funds, people like that, they are not as confident in the dollar as they once were. And so we're seeing a lot of diversities happening. We're also seeing a lot of growth in the euro sector. If you guys have not followed the news or the economy with the euro, there's been a lot of growth, just a lot of, I guess the best way to say it is a lot of growth with the euro, and a lot of investors obviously have to understand that institutional traders, banks, things like that, they're trying to get the best bang for their buck, right? They're trying to get the most returns as they can in the shortest amount of time. And right now, the euro is doing very well. It's performing very well. So I think one of the reasons we're also seeing euro USD climbing so high, and people are wondering, why is it not stopping, is there's a lot of sentiment towards not just a weak US dollar, but a very strong euro dollar. So, a very strong euro. So it's very, from a fundamental standpoint, as well as a technical standpoint, seeing the highly years broken, that type of thing, it makes sense that we're seeing Euro USD rallies the way it is. So I'm going to continue to be, at least in the very short term, I think it's fair to say that I would be probably more biased towards, and a lot of this has to do with the way these past couple days candles are closing, but a lot of it has to do with how volatile the markets were last week. I wouldn't rule out further dollar weakness. All right, and we're going to talk about why we're looking for buys on Euro USD in just a moment. So, looking at the dollar index, we can see it very weak, right? We see not only did the markets gap lower this week, we only had one bullish candle. And I told you guys this specifically yesterday, especially when we were looking at the Euro USD. If we look at that daily candle on Euro USD, I specifically circled this on yesterday's webinar. I circled this candle just like this, and I said, yes, we do have the two previous days bearish candles. We have, a lot of selling pressure on them, and we do have this bearish engulfing candle. But what I didn't like is I pointed out the wick on the daily candle right here, and I said, I don't like, I said this word for word on yesterday's webinar. If you guys were there or watched it, that I said, I don't like that the wick of this candle is about the same size as the body of this candle. So even though it's technically bearish engulfing because the body of this candle, this red daily candle engulfs the body of this blue bullish candle, there's still a presence of buyers in the markets. And for me, what kind of sealed the deal was seeing this daily candle once again. If we would have seen another bearish day, if we would have seen a big red candle, then absolutely would have probably be looking for sells on this pair right now. But the fact that we're still finding support in this area, we're finding these demand levels in this area is holding, right? We have this box. One thing I've been refreshing a lot on too, guys, is supply and demand. Going back to the basics, if you guys are not familiar with supply and demand, it's very important that you guys are. But we have this very significant demand level in this area, and I think that this pair is going to continue moving higher. And it's as simple as that, guys. I mean, we just are not getting that strong push to the downside. This area is struggling to be broken. We're still finding support in this area. We talked about this yesterday. On yesterday's live webinar, we were actually right here. We actually outlined this zone, and we said that this could act as an area, but if we break above this area, we're probably going to continue with a bullish move on this pair. So that's what I would be expecting, guys. Look for some upside on Euro USD. Now, the reason we got into this trade and then we ended up getting right out of it was because of the the interest rate decision in about, let's see, how many, I think it's about 12 or 14 hours we said, right? 14 hours. Yeah, in about 14 hours, a little bit less than 14 hours, 13 hours and 45 minutes, we'll have the federal funds rate. There's generally a lot of volatility surrounding that. So I am overall biased to the upside, but I think possibly we may, even if we continue to move up a little bit, I think we could have a sharp pullback and then price move. So we may look at placing a pending order, something along the lines of that. But overall, I think that this is poised to the upside. What you guys see on this chart right now is with the buy and the stop loss and the take profit is where we were looking at for our targets for stop loss and take profit on this pair. Our stop loss is just below this demand level. All right. And our take profit is right around this previous supply level. You guys are actually going to hear me refer a lot to supply and demand. I didn't really have necessarily like an epiphany, nothing. Obviously my strategy, you guys can see, is always simple and basic. One thing, it's now supply and demand is a little bit different than support and resistance. But they're very similar. Okay. Supply is generally in a resistance area. Demand is generally a support area, but we're going to get a little bit more into supply and demand. I've been doing a lot of reading you guys are going to notice that I'm going to be focusing more on price action and things like supply and demand, and focusing less on moving averages, focusing less on Fibonacci, and even focusing less on trend lines, believe it or not. There's a couple, like a little perspective of things. My eyes were just opened a little bit. I have the pleasure of being connected to a couple of institutional traders actually that share their trading tips with me. Not, of course, not like entries or anything like that, but what I mean is share the fundamentals of their strategy and what they use. And it's kind of cool to, take a little piece of everybody's strategy that works and kind of mold it and work on your strategy. So I think Euro USD will probably continue to rise. If you guys are actually connected to the trade copier, you guys will know that we took a scalp yesterday. Pretty tight stop loss, like about a 15 pip stop loss. I didn't have time to put it in Slack. That trade did not go too hot. We lost about 2% on that trade. And then on this Euro USD trade, we closed it with about 1.5% gain. So we're down about 0.5% for the week. Absolutely nothing to stress about. But I think Euro USD is probably going to continue to be moving higher. If it continues to consolidate in this area, we'll definitely look to get back in. It is taking off. It looks like we probably would have been safe with our stop loss out of this zone, but again, anything is possible. We're trying to limit our risk. It's always good to set a trade to break free as soon as we can. And if it ends up hitting our stop loss at break even and we end up not making any money, but we end up not losing any money, it's okay to be in a risk-free trade. So we'll watch this consolidation. We'll see what happens, but I'd like to see some upside on Euro USD. Also, I don't really have to look too much at the dollar index, because if I give you guys in-depth analysis on either the dollar index or Euro USD, you can apply the opposite to the other. So same thing happened with the dollar index. I don't really have to speak too much on it. That we had that bullish engulfing candle. It's the exact opposite of Euro USD, right? We talked about that bearish engulfing candle, but the wick was about the same size as the body. Same thing here. We have that bullish engulfing candle and then about a wick the same size as the body. And then, of course, today's candle kind of invalidated that looking for longs on the dollar index. So I'm going to remain biased to the downside on the dollar and to the upside on Euro USD for now. USD Swiss franc, obviously, same thing. You guys know, whatever I say on the dollar index, whatever you can apply the opposite to Euro USD, and whatever I apply on Euro USD, you can apply the opposite of that to USD Swiss franc. All three of these things correlate either positively or negatively. Dollar index and USD Swiss franc have a positive correlation, and then dollar index in Euro USD and USD Swiss franc and Euro USD have a negative correlation to each other. So I would probably be expecting downside on this pair if we see upside on Euro USD and downside on the dollar index. We have a nice little accumulation of orders going on in this area too. We had a nice drop and a little bit of consolidation and then another drop. Kind of similar to what we had back here, right? A drop, a little bit of consolidation, and then a drop. So look for maybe something like that to happen. Maybe drop a little bit, fake out some, aggressive sellers in this area to hit their stops in this area, and then move up, maybe make one last push up higher to trap aggressive buyers, and then actually make the move to the downside. So be looking for something along the lines of that. Pound dollar and pound yen. Well, we aren't really going to talk about pound yen. I'm actually not going to talk about it all on this webinar, but pound dollar is finding, I said I'm going to stop incorporating Fibonacci so much, but I'm going to be working with, obviously if we see a very nice trend line like this, I'm going to keep trend lines. I'm not saying, guys, that everything's changing. My eyes have been opened a little bit more to how important supply and demand is over things like Fibonacci and things like trend lines. Supply and demand is literally the psychology and the movement of the markets. I've really, over the past 6 months or so, focused on the more like psychological aspect, if you will, with Forex. Many of you guys know I have been trading for a little bit. I think it's 4 years and a couple months now. That's how long I've been involved in Forex. I have professionally been trading Forex as my full-time, as a full-time career for over 2 years now. And so, I'm not saying that I've been doing this 4 years professionally or 4 years as an expert, and I still don't classify myself as an expert. I'm still, every single day, every single week, every month, I'm still learning something new. I'm still always going to be a student of the game. Maybe once I have 10, 15, 20 years, something like that under my belt of trading, I'll consider myself more on the advanced side of things, in the realm of an expert, something like that. But it's one big thing with trading is not having an ego, right? Staying humble. You have to, have that ego death essentially in trading to be able to be successful long-term. A lot of people just want, they want to be right. They don't want to listen to their faults. They don't want to accept the truth, that they have to study and have to practice. A lot of people will get into Forex, take a couple of winning trades and, think they know everything and then never go back on the education, right? And then from there, it's just a revolving circle of blowing accounts and refunding accounts and blowing accounts and refunding accounts. And it's because they never, they kind of skipped that whole education zone. So don't be that person, guys. Every single person watching this, I truly do believe that somebody that truly wants to, I don't find learning trading difficult, right? If it's like anything in this world, if you want to learn how to do something, you're gonna learn how to do it, right? If you want something bad enough, you're gonna get it. Okay, the resources are out there. It's all breaks down to a willingness to learn, But if you don't want to let greed cloud your judgment. You want to stay focused and stay determined, stay humble, and you're gonna progress, guys. It took me about 2 years to get to a point where I could actually not just be break even, but make just a little bit of money, right? When I actually went full-time trading, where I lived at the time and the lifestyle that I had at the time, I only needed $1,000 a month, $1,000 USD to cover all of my bills, right? I had a car paid off. All I literally paid was rent, car insurance, and a phone bill. And that was pretty much it, right? Where I lived with, I was 20, just before my 22nd birthday at the time, 21, 22. And I was still living with friends off of right outside of a college called University of Arizona in Tucson, Arizona. And I had my rent was $400 a month. I lived in a house with 3 other guys and I didn't have a large overhead. I felt like I was at a stage where I had already gone through a year of pretty much going in circles like most people do, not really understanding and just constantly blowing accounts, not focusing on risk reward, trying to get rich quick, the classic, steps that most people take. And then after about a year of losing a pretty good amount of money and just being sick and tired of being sick and tired, I knew the potential. I always knew. Just finally one day said to myself, look, I'm going to take things seriously. I'm actually going to learn Forex. I'm not going to just F around loading accounts, blowing accounts, loading accounts, blowing accounts, and just hoping that I get one good trade that makes me $10,000 and, make me rich. And, now that I see the wealth that I have, having 6-figure wealth, it's still having $100,000 in a trading account is still is a lot of money to some people. But once you realize the potential of Forex and you realize the long-term compound effect that you can, in the money that you can really make in these markets by being patient and letting things compound, 6 figures becomes a very small amount of money. The way I used to see 6 figures, I now see 6 figures as, the same way I used to see $10,000. and I see $1 million as the way I used to see $100,000. And everything, your perspective on everything changes as you begin to understand the power inside of the Forex markets. So that's my little spiel, guys. So anyways, with pound dollar, I'm going to be looking for some upside on this pair. You know, I'm looking for some dollar weakness. I'm looking for Euro USD strength. So ultimately, I think we're going to be looking for some upside on this pair. I really actually do like the way this looks on the daily. So we had that bounce on the 4-hour on that trend line that we just looked at, but we also have a nice little bullish engulfing candle. And this time, unlike Euro USD, where we had that wick to the top side, not supporting or to the downside on Euro USD, you know, that I'm just going to very quickly revert to it so you guys can see what I'm talking about. But right here, this candle where we have this wick on the bottom of this candle where it's not supporting bearish momentum. On this candle, this blue daily candle, we do have it on the bottom, and because we want bullish momentum. So this is supporting a bullish move to the upside, and I think that that's something that we could see happen. So look for pound dollar to rise, look for your USD to rise, that type of thing. Same with pound yen. I'm not going to speak on pound yen too much, but you know, just keep an eye on that bullish engulfing candle, really big wick, you know, overall bullish trend. I think there's some potential moves to the upside that can happen. So dollar yen. We'll look at dollar yen. I think, of course, same thing with the correlations, guys. If basically, I'm going to put it this way, guys, and you should kind of get in this habit. If I just go over, and I'm not like, you know, foreshadowing anything. I'm always going to go over all these pairs for you guys. But just to help you guys out, you know, this is a pretty basic analysis that you can use, correlation that you can use. As long as you know what I go over on the dollar index, then you can apply the opposite of that analysis to your USD. You can apply the same analysis of that dollar index to USD Swiss franc, and you can generally apply that same analysis of the dollar index to dollar yen. Okay? All 4 of these correlations have very strong correlation. I mean, all of these correlate. I always go over correlations. I'm sure some of you guys might be sick of me talking about correlations. You probably know what I'm going to say before I say it because you've heard me say it so many times, but you guys have to keep in mind, we're literally growing with new members every single day, every single week, and I think it's good to go over these types of things so everybody can be on the same page, okay? So I'm going to continue saying it, guys. Repetition is the mother of learning. So dollar yen, I think some downside on dollar yen is very possible. We are seeing kind of very similar to the way USD Swiss franc is looking and the way the dollar index is looking. I mean, I'll even switch. Like, look at USD JAPY and look at USD Swiss franc. Not very different, right? Obviously, the individual candles themselves look different, but we're talking about market structure, right? Where USD Swiss franc, we have some downside consolidation, downside, and we're consolidating right now. If I overlay this chart onto dollar yen, it's going to be the exact same pretty much. Downside, consolidation, downside, consolidation. But see how, like, even though the individual candles look different, the overall moves over a period of time, let's say 24 hours, are generally the same. You have to understand these things, guys. And once you take the time to understand these things, guys, everything will become so much clearer to you. You know, you don't need to have a million indicators out there. You know, I get asked a lot because I don't name names, but you guys know that there's that one company out there that has that harmonic scanner that everybody raves about. They have tens of thousands of customers, but I literally know, and I'm not trying to talk like hate or anything like that. I'm just telling you guys facts. I literally know top earners in those companies. I personally have met top earners in those companies, and they don't even put their own money into the services and products being harmonic scanners and that type of things that they have, because they know they don't work. They know the people that are the only people that are making money, actually making, you know, any notable amount of money in those companies, are the people that are making money from recruiting. Okay, Forex and MLM don't mix whatsoever. You need to find a group like this where you're going to, and I'm not trying to talk up this group, but it can be any group, but as long as it's a group that has a verified track record, you know, they go over the psychology, they stress on the importance of risk management and the risk reward. I'm sure there's plenty of groups out there. They're obviously far and few between. A majority of them are junk, but I'm sure I'm not the only group out there that teaches the right thing and has, in my opinion, has the right approach to Forex. I'm sure there are other out there. So all I'm saying is you need to get the results you want, you have to surround yourself with the people that have the results that you want, basically. You know, it's as simple as that. I posted a status on Facebook just earlier today. I said in 1 month, March 1st, will mark 12 months of a consistent verified, third-party verified track record through my FX book. I don't know any other Forex trader that has anything even close to this. I see a couple people out there that have a few months, and that's good. They're building their track record. But I mean, if I don't even see a company with 40,000 customers and, growing and focused on recruiting, a single person in that company have any sort of track record whatsoever. So it's simple, guys. Gene, yeah, Forex and MLM don't mix. They don't, because you focus. How does teaching somebody to make money, pitching someone to make money when you don't even make money, right? Like most people that come into Forex, they don't make money right off the bat, right? That's like a 1 in a million chance, right? The average person's going to take a couple of years to get the hang of it and actually be able to make some sort of capital. So new people that don't make money are being taught how to pitch other people on how to make money. It's a silly concept that makes no sense in my opinion. So we'll leave it at that. So dollar yen, I think we're going to see some downside. I think dollar index is going to continue to weaken. AUD USD, I think we're going to see some strength on AUD USD. We're still seeing this trend line respected. Now, this is one, I said I'm going to kind of lay off the trend lines and lay off the Fibonacci levels as much. I'm going to be more focusing on supply levels, demand levels, that type of thing. But I do still want to be very respective of market structure, how we had a previous rally and we're in this current rally. And then once we actually had broken that rally previously in this area, we saw some major upside. And I think that's eventually what we're going to see on this pair. But I also mentioned this if you watched Sunday's live webinar, that this pair might want to make another push higher before moving lower. And I think it probably will. I think it probably will. With the way the markets are looking, with the weakness of the dollar, expecting a strong euro USD, that type of thing, we should see everything correlate together, and we should see, if that happens, we should see euro USD. I mean, we should see this pair move up as well. I will tell you guys, this pair and AUD USD, these two pairs at the current moment, I am interested in getting into. Euro USD, obviously, we already got into a trade earlier today. We scalped a couple pips off of it, made some money, went back to break even. So those of you guys that are connected to the trade copier, we made about 1.5%. Some of you guys that are not connected to the trade copier, maybe you pulled profits early, maybe you set your stop loss to break even, as mentioned in the signal group. Either way, it did go back to break even. I'm not saying you held. If you held, which I don't recommend holding, right? I wouldn't go against what I'm saying in the group, but if you did hold, you guys can obviously see that we're obviously making some higher highs from that entry. So we are good, and this is our stop loss down in this area. So we're overall good. Not taking credit though, because I did tell you guys to officially set your stop loss to break even, but I will be looking for buys on Euro USD. I still think we have a nice accumulation of orders in this area. I think it still needs to make another stretch to the upside. So I think that there's still about a 50 to 100 pip move to the upside on this pair. That's very possible. So I'm watching that and Euro USD both for upside. New Zealand dollar, US dollar. I want to talk about this yesterday, guys. We talked about this wedge in this area. And I actually drew this on yesterday's live webinar. If you guys watched it, we had this significant wedge in this area, and then we saw some upside. All right. That being said, I think we're going to see some more upside. We can see, just based on the daily candle, I'll very quickly just hide everything. We can see very bullish momentum. We aren't just talking about this daily candle that's happening right now. We're talking about the accumulation of orders in this area, and also just the strong presence of sellers based on these wicks. We kind of have this zone right here where we had a previous supply zone, and now creating a demand zone over to the right and looking for a move to the upside. So this is what I will be looking for on this pair, is a move to the upside. It's kind of already taking off a little bit, as you can see. So probably not as interested as getting into a trade on this pair as I am with AUD USD. It's still obviously well around this zone. So I'll look for AUD USD to potentially go a little bit higher and then take a buy. And USD CAD, I think USD CAD will potentially see some downside. However, USD CAD does look really good to the downside. I think there's going to be another big push dip to the downside, but we have to be careful because in less than 10 hours, we have this month-over-month GDP. Now, it's just month-over-month. We know that there's 3 ratings in order of what's important the most to the least important, which starting with the most important year-over-year, then quarter-over-quarter, then month-over-month. So it's on the lower spectrum of importance, but it is still rated as a high impact piece of news. So it is something to be aware of. So yeah, and then USD CAD overall, I mean, we can see some very, very clear price action in this area. We can see this bear flag that was created. Also, I mean, we just have some confluence with the Fibonacci levels, the 61.8% retracement level that we did break, retested this previous support area, now acting as resistance, and we're looking for some more downside. So it's very possible that over the next week or so, even maybe before this week is over, we could see another 100 to 200 pip push to the downside on USD CAD. But that's what I'll be looking for, guys. Just a couple things to be looking out for. But yeah, again, just a very quick recap, for the signal channel, looking at Euro USD, going to be looking for some opportunity to the upside. AUD USD going to be looking for some big opportunity to the upside. If I see a setup which is an absolutely great risk to reward, and I think it's worth taking the risk, we may look at taking a sell on USD CAD, even with the high impact news. Because at the end of the day, if we can take this trade in a few hours, there's potential for this trade to be closed before the news comes out. And of course, if we get into a little bit of profit, we'll set that stop loss to break even. So, and to fall back on the basics, we always use a stop loss, never risking more than 2% of our account per trade. So that is the key. So I'm going to leave you guys with that. If you guys have any other questions, please feel free to reach out to me. I think there's been a lot of growth, a lot of good questions in the group recently. Been very consistent. I think people are happy. Don't forget, for those of you guys that are also a part of the lifetime membership, we do have the cryptocurrency integration available for you guys. I think there's a little bit over 200 of you lifetime members on the Facebook group. And then I think we're missing about 25 or 30 people that are lifetime members that haven't joined the Facebook group yet. So we have a majority of the lifetime members in that secret Facebook group where we discuss crypto and do our crypto webinars and whatnot. But that will be tomorrow at 9 p.m. Eastern for the crypto webinar. We also did drop a new ICO that I am putting a little bit of money into that looks really, really good. It deals with artificial intelligence and all that good stuff. It's has a big potential. It also has to do with Forex, believe it or not, it has to do with the finance industry. So, that's just one little tiny thing of the entire coin. So just another incentive for if you guys are lifetime members. If you're a monthly member right now, we do have 15% off the lifetime membership for, I believe it's the next little bit over 2 weeks left for you to get in the lifetime membership at that price. But that is that, guys. I appreciate you guys' time, and see you guys on tomorrow's crypto webinar at 9 if you're a lifetime member, and then our normal time at 10 p.m. Eastern Standard Time if you are just a regular member of Positive Trader. So catch you guys tomorrow. Have a good one, guys. Take it easy. Peace out.